People are still doing the gold to silver swap. It's certainly a good time to do it at 83 to 1. You're talking being here roughly 1/5 of 1% of the time over the last 100 years. It's an anomaly in price. I mean, it's coming out of the ground at 7 to 1. For 5,000 years, it was 16 to 1. The price ratio for the last 150 years has been roughly 42 to 1 on average, and it's trading at 83 to 1. It's a historically significant opportunity. It is the most undervalued asset on the planet.
Renowned precious metals analyst and president of Miles Franklin Precious Metals, Andy Schectman has described silver as the world's most undervalued asset. According to Schectman, the asset's prices have been artificially kept low by some sophisticated big money investors to advance their yet-to-be fully revealed interests. With the gold-silver ratio just below 83 to 1 ounce of gold, Schectman believes the white metal presents a historically significant opportunity for all categories of investors. Another fact that makes silver particularly attractive to Schectman is the number of big money investors that have flooded the exchanges with demands over the past year. According to the Silver Institute, the total global silver demand posted a record high of 1.24 billion ounces in 2022, an 18% increase compared to the previous year. The Institute reported that silver industrial demand also rose by 5%, physical investment by 22%, and jewelry and silverware by 29 and 80% respectively. As a result of the strong demand and lower mine production in 2022, the silver market achieved its second consecutive annual structural deficit at a significant 237.7 million ounces. The Institute said the deficit was possibly the most significant deficit on record. According to Schectman, one interesting fact about the increasing silver demand is the category of investors that are loading up on the white metal, sovereign funds, family offices, central and commercial banks, all sophisticated investors with enough funds and influence to manipulate price and enough resources to know things that are hidden from average investors. We will now bring you insightful clips from Schectman's interview with Arcadia Economics. Please watch the video to the end, so you don't miss any of the priceless information the renowned analyst shares. Also, ensure you give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos.
It's a historically significant opportunity. It is the most undervalued asset on the planet. And you're beginning to see big distributions of it and accumulation of it by the big money, where you had 144,000 plus kilograms taken off the Shanghai Gold Exchange in one day. Huge outflows that we've never seen. That's the biggest one day outflow in over a decade. You're seeing 1.9 million ounces drop off the COMEX market in the last year and a half. And it's a situation where the biggest money in the world is accumulating silver as well. 300 plus million ounces by India. Huge drawdowns, as we've talked about repetitively on your show, on COMEX and the LBMA. So silver's price is certainly being managed, and the biggest money in the world is using that as an opportunity to accumulate a whole heck, a lot of it, a lot more than the price would dictate. And I think it's one of these deals where at some point the reality catches up with the price, that there just isn't enough of it. Look, the big money who's taking all of these distributions or deliveries off of the exchanges is front running the inevitability. People doing this are much more sophisticated than your average trader. These are the sovereign wealth funds. These are maybe the family offices. These are the central banks. These are the commercial banks. This is big money that's doing this. And they know the playbook. So whatever it is, it's coming, and you can see it by their actions, and they're front running the people who know the playbook. So it will happen, and it's very difficult sometimes when you got guys like me and you and others that have been saying this for a long time. I will tell you that I've never seen an environment that is more fitting of what we're talking about, where the withdrawals are literally continuing unabated and accelerating. And we haven't seen this happen on the Shanghai Gold Exchange, and now we are. We've seen it come off of the ETFs. We've seen it come off of COMEX. We've seen it come off the LBMA. And now you have the biggest one day delivery off the Shanghai Gold Exchange in over 10 years. This is becoming real. So it will happen, Chris. I don't know when, but the biggest money in the world is showing us that it is already happening. And we wake up one day and it's too late, and it'll be on a Monday morning and the world will change. And I really think that's how it will happen. This is the warning, just like we always talk about Hemingway, little by little, then all at once. The problem is most people aren't paying attention to the little by little. We are, your listeners are, but the all at once is what will catch everyone by surprise. And I don't know what that trigger point is, but I do believe that it will happen that way.
Yeah, it has been interesting to watch. The decline has slowed down, as you can see over the past couple of months. That chart has flattened out a bit. Let's take it back to the 1 year.
Let me interrupt for 1 minute. Yes, it has. But what's happened over the last 2 months? You've had almost 250 million ounces taken off of LBMA on exchange for physical contracts. Because maybe at this point right here, you've had people on your show who said we're basically out of available silver on COMEX. And if they would have taken that kind of try to take more deliveries off of COMEX, now you start to get to a point where you really are exposing it. We talked last week on your show, there were 9,000 short contracts by the commercial banks and only 6,000 contracts available for delivery. How much more can they take without everyone realizing something's going on? And so, yes, it's flatline, but they are now just moving it to the Shanghai Gold Exchange and to the LBMA on exchange for delivery. I get your point, but these people are very sophisticated, and it gets to a point where you breach that line and it just becomes so obvious that something's going on that it starts to attract too much attention is the way I would address that point.
During the interview, Schectman also assesses the current state of the United States economy, especially in view of the recent decision to suspend making a decision on the debt ceiling until 2025, quite conveniently after the 2024 presidential election. Schectman explains that the United States, through the many unwise monetary decisions of the past 2 decades, has driven itself into a corner. Although the world's wealthiest and most advanced nation, it still continues to survive on debt, which is increasingly becoming unappealing to the rest of the world. Schectman believes that as more investors turn away from the U.S. Treasuries, policymakers will be left with two options: print more dollars or make the debt more attractive by raising interest rates. Of course, both are temporary solutions with serious long-term consequences, especially for an already ailing economy. Let's get back to the discussion as Schectman speaks about the coming ultimate collapse.
I mean, as everyone knows, look, the secret to maintaining a personal balanced budget or paying off your debt is never just to simply raise your debt ceiling or your limit again and again and again and again. And I think it's a joke, and I think the world understands that. And I think it's shameful that the wealthiest, most advanced, prosperous, democratic nation in the world results to finding itself in this position every few years. It was just January of this year when we had to take extraordinary measures to raise the debt ceiling again, and that was to borrow money from the Civil Servants Retirement Fund, the Postal Service Retirement Fund, and the Disabled Veterans Retirement Fund. I found it shameful. And this is right when we're giving the Ukraine billions and billions and billions of dollars. Look, even before the debt ceiling, Janet Yellen said that by 2033, we would have a $50 trillion debt and $2 trillion per year in annual deficits. Well, Janet Yellen's been nothing but wrong for a long time. I guess the bottom line, Chris, is that what they did just kicks the can down the road until ultimately, I think it leads mathematically to the ultimate collapse. You know what it is? It's almost like the feather that falls on the scale that just tips it. I mean, it's just one thing after another. And that's kind of one of the things that differentiates to me this time from previous times. It's like, growing up and being a young adult and a young businessman, you would have events that would happen very, very infrequently. Years would go by before you would see something that would really rattle the markets. And yet here it is, every single day there's something new. And we've all been bombarded with all of this stimulus since 2020. And I'm not talking financial stimulus, I'm talking just everything thrown at us, starting with the pandemic and everything that's happened subsequently. And I think, people are just looking at that, or did look at that, as just one more piece of a very, very hard to decipher puzzle. And it's creating anxiety. To me, it was nowhere near as relevant as what's happened with the banks. And I don't think that the last chapter of that has been written either. I think most people believed that they would ultimately come to a resolution, that maybe there would have been a very short default. I thought that there might be, based upon the acceleration of the premium on the credit default swaps. It certainly looked like that was a possibility. But look, everyone knew that they wouldn't just flat out default and create chaos. So it was less of an event, but just more of, I think, reinforcement that things are really not well in the system. And I think that's what people are beginning to see. And maybe this is why we're seeing all of these states adopt using gold and silver as legal tender. There is some sanity out there, and we're not the only ones who realize that something is amiss. And so little by little by little, you continue to see more of these things that just make it seem like we live in bizarro world. I think there are people waking up to finding solutions. And at some point, I think it just becomes obvious that we have really outlasted our usefulness as a world reserve currency. And people are beginning, I think, to sense that, whether it be the forces outside this country or even some of the politicians inside this country that are worried about the dollar standing globally and what it means to hold dollars to your wealth, ultimately to your wealth and your well-being in a country where it's becoming very obvious that they are choosing inflation over austerity.
In April, Mississippi became the 43rd U.S. state to end sales taxes on gold and silver. The law, which goes into effect on the 1st of July 2023, exempts gold and silver coins and bullion from state sales tax. Last month, the Alaska House also passed a bill that would allow gold and silver to be used as legal tender. The bill would allow business owners to decide if they want to accept the precious metals as currencies. Big Lake Republican Representative Kevin McCabe, who introduced the bill, told the House State Affairs Committee that one of his constituents suggested the idea to him because they did not trust the national banking system. More than 10 other states, including Arkansas, Wyoming, Utah, Texas, have passed similar bills. Texas is looking to create 100% reserve gold and silver-backed transactional currencies. The precious metals revolution is here, and as Schectman has cautioned, these little warnings might be all we get before it's too late. What are your thoughts on Andy Schectman's interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.